Good morning, traders. It's 7:53 a.m. Chicago time, 8:53 Eastern. We're starting about 7 minutes early today. I have some contractors coming to the house to take care of something, and I wanted to make sure I get this out there and delivered to you in time not to be interrupted by them. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance again. We seem to reverse our market stance these last couple days. The market stance, crude oil is still is trading lower than where it was yesterday. Yesterday it rallied back up to new highs on the close. So even though we're trading lower than where we settled yesterday, it's still up. Crude's trading 49.85 up, down 0.64% or 32 cents. Again, it rallied into the close yesterday and held that price up to $50.43. Here we are at the $50 handle in crude. We haven't seen that in quite some time. The treasuries are the second weakest futures product that I'm monitoring. The treasury bond is down 14 ticks. The leader today is the DAX, followed by the Euro stocks. The DAX is up 104.5 points, or 0.86%, followed by the Euro stocks, and then the Dow Jones are up 106 points. However, we're not seeing that kind of a move in the other indices. They are up, but not all that much. The S&P is up 6.75 points this morning. The news, as far as the news and what is driving this, we saw some releases this morning in Europe. BP reported much better than expected. The market expected year on year of a loss of 1.42 billion. They showed a gain of 144 million. And revenue was also higher, much higher. Revenue for BP was 57.4 billion versus the 47.3 billion. And then, of course, we got overnight, we got the release from the the Reserve Bank of Australia. It left the cash rate target unchanged at 1.5%. This morning, early, we got multiple manufacturing PMI numbers, Spain, Italy, Germany. But we also got, in the UK, the Eurozone released its GDP, came in at 0.6% Q on Q, in line year on year at 2.1%. And then at 7:30 this morning, Central, 8:30 Eastern, the U.S. released its personal income, came in weak at 0.0% versus 0.4%. Personal spending came in at 0.1% in line. And then we also got the June PCE core in line at 0.1% month on month, and the PCE deflator month on month at 0%. As far as what we're expecting coming into today, as far as releases, we get the manufacturing PMI final at 9:45 Eastern. That's 15 minutes after the open. We also get ISM manufacturing at 10 a.m. for July, 56.4 expected. The PMI is expected at 53.2, so we're expecting 53.2 followed by 56.4. Construction spending is also at 10 o'clock, expecting 0.4%. Other than that, the day is pretty clear. After the close, we get Apple. Apple's expected at $1.57 today. Let's switch gears and look at what we looked for yesterday versus what we got. Hang on. One second. Okay, here we go. Moving computers around tends to mess things up. Okay, so this yesterday, the expectation was for the market to coast down again, um, slightly, and then I was looking for an impulsive move up. If we got the impulsive move up, I was looking for the continuation trade higher. The target being 24.78. I expected the market to push through that by a little bit, and then to trade sideways into the close. That didn't happen, so this did not take place. The secondary hypothesis expected a strong open, which would push into that 78 pretty quick and then consolidate there for most of the day before we get a continuation move later in the day. Expected the market to settle, and I looked for the potential for new highs if that happens. If we saw some sort of an OTD or a drive, an open drive, I expected new highs, but I expected the market to settle back in around the 78 area. Hypo 3, this did not work either. Hypo 3 was looking for the market to consolidate on the open in the gap and then looking for an impulse down. And we got that. We got the impulse down and then looked for a little bounce back up to the prior day's high right here. And then looked for a continuation to 24.65. 24.65 is the value low. This is a Gaussian profile. It is imbalanced. The value area is expected to hold. If we trade outside of the balance and we fall back into it, then we're likely to test all three key areas in that profile, being value high, which is where we expected to bounce early, and then we expected the market to test the point of control, and then we expected the market to test value low to hold and bounce back up. That is exactly what happened yesterday. Here's what we got. Okay, so we get the consolidation as expected. We get a push. We did not get a bounce at value high before we fell through. We got this impulsive move down 6.75 points into the prior day's point of control. Consolidation. I was stalking the mid. The mid aligned with VWAP. It aligned with the prior day's high. That would have been a perfect setup there. Nothing's perfect in trading, but this would have been a pretty good setup here with some backup up into the opening swing low at 73. So I was looking to go short between 71.50 to 73. Up into above 73 would put me wrong, and I was looking for the continuation down to 65. We got to 65 and a quarter. We missed the value low area. Actually, we hit the value low on the nose yesterday. Let me see. Yes, 65 and a quarter. We hit that on the nose yesterday, and then we got the bounce back up, and then the market basically traded sideways for the rest of this session. We have a very, very strong value area, strong kurtosis there. A lot traded in a small range between 24.70, 75 down to 24.67 and a quarter, which is also the IB low, basically. And so what we have here is a strong consolidation going into the close. So we expect the market to either step away from here up or down. The market has stepped up. The market's trading at 24.75.50 currently. And yesterday's plan was pretty much hit right on the nose. We did get into the prior day's value. We did hit the 65 and a quarter low as drawn here, and we did bounce back up into the close. It's not common. It's not always that I would expect the market to follow the auction process as meticulously as it did yesterday. It's nice to see, but again, The goal is not to be right here, although it seems like that's what I'm saying. The goal is not to be right. The goal is to have a plan for whatever the market does and to act according to that plan. It's hard. It's easier to say than do, but coming in with a plan allows you the freedom to just stay calm and to look for areas to interact with the market as opposed to wondering if every tick is the spot where you should be trading. I'm going to make this real quick. As far as what it did post close yesterday, we got our move in the Asian session over the last 2 weeks. We've had an Asian session that's completely sideways with the European session rallying. We got our move in the Asian session here at 8 o'clock Chicago time. We rally immediately to the high of the prior day, consolidate for the rest of the session. We get a second continuation rally into the overnight high at 24.77 and a quarter. We're pushing through that really important low volume node from last Thursday. I'll show you that in a minute. Actually, it may be on this chart too. There it is. This is last Thursday's trade, and there's the low volume node that I'm referring to. We're getting through that, and if we get through that this morning, then the target becomes 24.78, and we're likely to see new highs this morning. Now we're trading 24.75 with the all-time highs at 24.80.50 or so. So we're not far from it, but the overnight session is quite bullish, and I'm expecting that to continue. So coming into today, I'm looking again at the same thing. We're putting in higher lows here, right? We're putting in a channel that's trending up. The expectation this morning, open auction just outside of the range, a potential for an attempt lower. An attempt lower is likely to find a bottom at about 24.71.50 or so. Looking for a base, look for an impulse into 78, consolidate around the 78, poke through the 80.50, and then finish back in line with the 78. That's hypo 1. Note that hypo 1 looks almost exactly as it did yesterday. We're back and we're resuming where we were yesterday. This morning, yesterday's open was right here. These dotted green, these green dots is yesterday's opening print. Today's trading is at 24.75, and we still have 24 minutes to the open. It could drop a little bit. So we're resuming where we were yesterday. We are canceling out the auction that occurred lower. To me, we have a good base for new all-time highs now, and I expect that today. So that's the primary hypothesis. Secondary hypothesis is for it to continue higher immediately, push through all-time highs, pull back, and push into 24.85, which is the next measured move target, and then consolidate into the close, and then potentially make another attempt and close near highs on this. So what I'm looking for today on Hypo 2 is a profile that looks a lot like this, except I can't draw a straight vertical line with a mouse. But that's what I'm looking for on Hypo 2, basically a trend up day, but don't expect, a 20-point trend, more like a 10-point trend that just grinds up and is relentless to shorts. So that's the secondary hypothesis today. If we don't do any of that, if we start to get an open auction and it fails to push higher and it starts to move into the prior day's range, then again, we're looking for 24.68.50 for it to consolidate and then to start pushing again through that 65 to finish somewhere in this 2-day composite right here. Notice yesterday's point of control is on top of the day before. These pink lines are the point of control. Here's one right here. Here's the prior day. So this is yesterday's, the prior day. So what we have is a market that's compressing. So I expect an imbalance to come in today and for that energy to dissipate to the upside. That's Hypo 3. Okay, so those are the 3 key plans for today. Again, the goal is not to predict what we're looking for the market to do. The goal is to watch what happens. I'm not taking trades as soon as the market opens. I need to see who's in the fight and who's got the better punches, and I'm looking to be on that player's side. So take your time on the open. It is a good idea for most people, at least from what I see from our trade analyzer. For most people, it's a good time to. It's a good idea to sit out the first half hour anyway. So it's just much better for you to just wait for the market to set a tone and then to jump on. There's no sense the return on your risk for trying to jump in and catch something really, really early is just not there in my opinion. But again, that's just my opinion. Good luck and take care.